Most people see ads saying, double your money in 60 seconds and get tempted. But before you click any button, let's understand the full truth about binary trading. What it is, how it works behind the scenes, why most traders lose, which red flags to avoid, and what safer learning paths exist. Stay till the end, because I'll also show you the math that exposes whether the game is stacked against you. Binary trading is a yes-no bet on price direction within a fixed time. You pick an asset like EUR USD, pick an expiry such as 1, 3, or 5 minutes, then decide up or down. If your prediction is correct at the exact expiry price, you get a fixed payout. If you're wrong, even by a tiny tick, you lose your entire stake. The reason it looks easy is because the interface is simplified. A green button, a red button, a big timer. But simplicity doesn't mean safety. The entire structure is built on all-or-nothing outcomes and very short time frames where random noise dominates. Mechanically, here's what happens. You choose a strike, usually the current market price, choose expiry, and the platform shows a payout like 70–90%. Suppose the payout is 80%. If you stake $10 and win, you receive 18s, your $10 back plus 8 profit. If you lose, you get $0 back, meaning a full $10 loss. That 80% payout is the key. Because you don't get symmetrical odds, your break-even win rate has to be higher than 50%. Now let's talk about what moves price on such short horizons. In 1 to 5 minutes, microstructure effects, spread changes, and random volatility spikes matter more than clean technical patterns. A candle wick of a few pips can decide whether you win or lose. News releases, liquidity gaps, and market open-close moments can create sudden bursts that invalidate your setup even if your broader direction was correct. Unlike spot Forex or futures, you can't set a stop-loss or partial close. It's binary. Full win or full loss at expiry. That lack of risk management makes variance brutal. Psychology is another silent killer. The platform design is gamified, flashing timers, instant results, fast dopamine. After a loss, traders chase with bigger stakes, martingale. For example, lose $10, then stake $20 to recover, then $40, then $80. A short losing streak wipes accounts quickly. Even if you avoid martingale, the quick feedback loop encourages overtrading. Professional trading is boring by design. Measured risk, position sizing, clear invalidation. Binary trading pushes the opposite behaviors. Let's be honest about the broker side. In many binary platforms, the broker is the house. Your loss is the broker's win. That conflict of interest means payouts are set to retain an edge for the house, just like a casino sets odds. Even on legit platforms, the asymmetric payout mathematically favors the broker over a large sample. On shady platforms, it can be worse. Quote, delays, widened spreads near expiry, sudden freezes, bonus traps that lock withdrawals, or KYC holds once you become profitable. These tactics may not be visible in a handful of trades, but show up over time. Some people say, I use technical analysis, support, resistance, candlesticks, so I can beat it. Proper TA can give context, but very short expiries compress decision time and amplify randomness. A level that works on the 15-minute candle might not protect you on a 60-second binary because a single wick punctures the level for one tick, and that's enough to lose. Also, payout math still applies. Even with a good read, if your average payout is 70–80%, you must keep win rates consistently above 56–59% net of all mistakes, slippage, and emotional errors. That's a high bar for most retail traders. Let's walk through 2 realistic scenarios. Scenario 1. EUR USD is in an intraday uptrend, pull back into a demand zone, bullish pin bar prints on the 1 minute. You take a call for 3 minutes, with an 80% payout. Price goes slightly up, hovers, then a late cycle wick dips 1 pip below the strike at expiry. Result, total loss. In spot Forex, that same idea could still be profitable if you set a wider stop and let the trend continue, but binary's strict expiry converts normal noise into fatal outcomes. Scenario 2. You avoid news hours, trade only range breakouts. A clean breakout forms, you click put or call. The platform shows a tiny delay. Your entry gets filled a little worse. That half-second latency changes a marginal win into a marginal loss. Over dozens of trades, these small frictions add up. Compare this to spot Forex or futures. In spot, you can size positions, set stop loss, take profit, scale in-out, and build positive expectancy through risk-reward asymmetry, e.g. risking 1R to make 2R or 3R. You can be profitable with a 40–50% win rate if your winners are larger than losers. Binary removes that tool, your upside is capped, the payout, and your downside is full stake, so you can't create a favorable payoff ratio. Your only lever is win rate, which is hard to push above the break-even threshold consistently on micro time frames. Let's address the real versus fake question precisely. The concept of binary options is not inherently fake. It's a legitimate financial product in some jurisdictions. The problem is twofold. The product's structure makes it extremely hard for retail traders to sustain profits, and the industry has historically attracted many unregulated or poorly regulated brokers where scams, withdrawal issues, and bonus traps are common. So the risk is not only market risk, but also counterparty risk. Will the broker pay you fairly and on time? If you still intend to experiment, treat it like a high-risk experiment, not a primary income plan. First, never deposit money you cannot afford to lose entirely. Second, verify the company's regulatory status on the regulator's official register, not just the broker's website claims. Third, avoid bonuses that lock your funds until enormous turnover targets are met. Fourth, test withdrawals early with a small profit to confirm the pipeline works. Fifth, track every trade in a journal, entry time, payout, result, screenshot, and reason. If after 200–300 trades your win rate net of frictions is below the break-even threshold for your average payout, the data is telling you to stop. Risk and money management in binary is limited, but you can still control exposure. Cap daily loss, for example, 2–3% of your account, and daily trade count to avoid tilt. Never martingale. It mathematically concentrates risk into losing streaks. If you must increase size, do it linearly and only after a verified statistical edge over a large sample. Prefer higher time frame confluence, e.g., take 3-minute expiries only in the direction of the 15-minute trend, with price pulling back to a well-tested level, and avoid the first minutes after major news. These don't guarantee profits, but reduce pure randomness. Let's also be clear about marketing traps. Phrases like guaranteed 90% returns, AI bot never loses, or withdrawal in seconds are classic hooks. Real trading services never guarantee profits. If a platform or influencer pressures you to deposit fast, join a VIP group, or buy signals promising unrealistic win rates, step back. Do a reverse search on testimonials and check third-party reviews with a critical eye. Many are affiliate-driven. Safer. Alternatives exist for genuine learning. Start with spot Forex or index CFDs on a regulated broker. Use a demo to build process, then go small live. Learn proper TA, risk management, trade planning, and post-trade review. Study market structure, liquidity, and volatility cycles. When you can execute a plan calmly and log consistent behavior, only then think about adding complexity. Remember, the goal isn't fast money, it's skill and consistency. A quick word on legality and taxes. Rules depend on your country and can change. Always check local regulations and tax guidance. If it's restricted where you live, don't try to bypass that with VPNs. You could lose access to funds with no recourse. KYC is standard. Have documents ready and ensure your name on the trading account matches your payment method to avoid payout issues. Here's the final verdict. Binary trading isn't fake as an idea, but for most retail traders, it behaves like a casino with worse math than it looks. The payout structure forces a high break-even win rate, the time frame injects randomness, and the broker incentives are often aligned against you. Can someone be profitable? It's not impossible, but it's statistically rare, and the path of least regret is to build skill in markets where risk can be managed and edges can be structured around favorable payoff ratios. If this helped, drop your experience in the comments. Have you tried binary before and what happened? Your story may save someone else money. Like the video, share it with a friend who's getting targeted by flashy ads, and subscribe to Financial Freedom FX for clear, no-hype trading education.